Hello, this is Dan and Christina with Peer Team, and welcome to episode 3 of Move Out of Modification and On With Your Life. Today we're going to give you some real nuts and bolts of what is actually controllable in your circumstance, because if you don't have a plan B right now, there's a plan already made for you.
Absolutely. It's very important to understand that things are changing rapidly right now in the short sale industry as well as in the notice of default and foreclosures. And if you're in a situation where you're having trouble making your payment, then you really need to pay attention to this video.
Right, so making your payment, people fall behind generally. What we're going to give you today is we're going to give you some time frames that you can absolutely count on, and then we're going to give you some time frames that you can control. Because if you really believe your family is important to you, then having the option you can control is going to be the way better situation. Of course, you're going to want to talk to your tax attorney and things like that, or tax accountant, make sure that these work out for you. But let's start going through the time frames first, Christina, a little bit. Let them know what happens about 3 months after you start making your payment. What happens?
Well, once you stop making your payment for 3 consecutive months, you receive a notice of default. And that basically tells you that the bank's aware you're no longer making a payment and you've got a pretty hefty default on record right now. But what it doesn't overly explain is it's also the bank saying, hey, tick-tock, we're going to be making a decision on your house fairly soon. Now, long time ago, like 2-3 years ago when this wave kind of started, people wouldn't get those. They'd call in, say we want to modify our loan, they'd start working on it, and a notice of default wouldn't start for maybe a year, sometimes 18 months. And we've all heard stories of people staying in their house for almost 2 years and not making a payment. Well, this year, with the Obama administration and what have you, they've decided that's not going to happen anymore. So they are very strict on recording the notice of default now. Whether you're in modification or not, they want the time frames to start. And that's important for you to understand because your decision-making power is getting limited each month that goes by.
Now the foreclosure time frame that happens is basically just as Christina said. We go from a 3 months where your notice of default is recorded, and most often it's done by the first trustee. Within about 4 months after that, 3 to 4 months after that, a non-judicial foreclosure takes place, which means it's completely beyond your control. Your property could sell at a discount over at a trustee's sale on the courthouse steps where it's actually done. Or it can actually go back to the bank and be put back on the open market again. Be aware that going through the foreclosure process, you still remain responsible for that deficiency balance unless something prior to that has happened and you've gotten other help from a bankruptcy attorney or something like that where you know that's not the case. So keep that in mind. Now let's go over your borrower options on the side that you can control. You're 3 months behind on payments, a significant hardship has happened, a job loss, something that has actually triggered where your home has become non-affordable. What happens at that point in time?
Well, you have very limited options at that point. We've heard about many different options, but the reality is there's primarily 3. One is to pay up on your notice, to take the $10, $12, $14, $15,000 and come current and keep going. Number 2 is to decide to short sell your home and say, okay, I'm going to go ahead and enlist a real estate agent, sell my home, do the process according to the proper timelines. The last is to loan modify, which has to do with the new HAMP program, or say you're in some form of modification and wait for the bank to make the decision for you. And that's what many people are finding right now is the hardest part to be in. They think that the bank's not foreclosing on them, but at the same time the bank isn't changing these dates. And unfortunately we've had too many times as of late where people thought they had time and then we pulled up the tax record and they were sold yesterday. And we definitely don't want that to happen to you.
I've had so many people going up to their door as someone who actually sells foreclosures as well or lists foreclosures for sale, and they said, we were in loan modification. What happened? And so the bank is not communicating with them, they're not communicating with the bank, they're basically doing a silent pray method that everything's going to be okay if I just stay in loan modification. This is the bank's only security that they're going to get the property back, is to start the foreclosure process, and once started, there's a strict timeline that's involved in that. So let's go over some short sale options and kind of move you guys on a little bit further as far as how a short sale actually protects you while loan modification keeps your time frames running fastly towards foreclosure. Okay, now let's go through the short sale process kind of in a nutshell. We covered a lot in that last portion. The last 2 things of foreclosure though that you need to understand is the junior lien holder, which is your second note can actually file a deficiency judgment as well prior to foreclosure. So if they do that, you could have 2 open judgments on your credit report. And that's where foreclosures are reported, where short sales are reported a little bit differently. I always get what's the difference between the two, which we'll do a video on that another time.
And don't forget too, if you have a homeowners association, they can file against you too and have attorney costs and have that judgment keep going too. So please be conscious that there are many facets to a foreclosure other than just your first mortgage.
It's completely uncontrollable for you to actually control the terms of what happens afterwards. Now let's go briefly through our short sale options, and we try to make it easier. We highly suggest you use experts like us to actually short sale your home, and not just go to anybody that may or may not have the right experience to get the job done.
Absolutely.
So let's go through our options.
So number 1, you list us to list your home, and we put it on the market. The idea of putting on the market is to get as many offers as we can. That puts you in the most negotiating power with the bank, and that's very, very important. We secure an offer, we decide, okay, this is the one that's really going to be engaged for the long haul, make sure it happens and stick with us.
Now real quick on the offer has to be at or around current market value. So be careful with agents that will tell you that you can just list it for a really low price to drive up offering bids, because the banks will be quick to BPO that, and we'll explain that later, and turn it back to you.
And they do negotiate. I mean, we have seen banks now coming back with counteroffers, which again, we didn't see before these new programs. Then we negotiate, and here's the great thing. You are now in full negotiation. You stay in your house securely. There is no option. We know the trustee sale. The bank knows we're working with them, and so you are there safe. The bank approves the short sale. They say, okay, based on these terms, we either change some of these terms and we negotiate that, or we approve what is. And we work on that diligently to make sure it works for you. Once we have an approval, we open escrow, and we become a very traditional sale at that point. Because we have an approval.
30 to 45 days from that point on.
And remember, you're in your house safely at this point. Now the deal closes as agreed. They move out, or you move out, they move in, just like a traditional sale, and the bank approved what you agreed. So there's nothing for you to wait for. There will be notices from the IRS later on deficiency balances, and you'll talk to your tax consultant regarding that based on your purchase money status.
Or understand how to negotiate out deficiency balances if possible prior to the short sale being fully approved, so you can secure your future.
And now, because HAFA is in play, there's a possible payout to you. We have 2 clients right now who were approved under that program, and because they agreed to do the short sale and they did it according to the guidelines that the bank wanted, they're going to be receiving, one of them's $2,000 and one of them's $4,000 at the close of escrow to go ahead and move out. So that's a great new option for people who agree to short sale.
Financial incentive to help you move and help you move on with your life. So if you need help with any of these situations, or if you just have questions or need a referral to a good CPA, bankruptcy attorney, any of the people that we can connect you to, that's what we do here at Peer Team. So again, this is Dan and Christina with Peer Team, and all the best to you.
Thank you.